Hi, this is Sam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday the 10th of January. Starting off with the FTSE 100 where we just got it down to a rising trend channel there from the latter part of October. The floor of the channel there level with the 50-day moving average 75.40. Recent support around 76.40 and above that looking for the top of the channel towards 7800. Obviously at the moment the rather soggy performance for January to date, and the break of that uptrend line in the RSI window, finally after a few days of being either side of it, does suggest that we might have to test the floor of that channel towards 75.40 over the course of the rest of this month. At this stage, really only back above 77.10, 77.20 in recent resistance, really snapping the rather dull price action at the moment for the FTSE. Moving on to the DAX, which already had its great run in October and going into the first part of December. Nice consolidation at the moment, finding support basically at old resistance from July, 16,500. Above that, looking for 17,000 as a retest at that May resistance line. Best case scenario by the end of next month up to as high as 18,000 and a January 2023 resistance line projection. If we do break down below 16,500, it is the 50-day moving average area and old August resistance at 16,100, which would be the possible destination on the downside. Not much downside for the Dow in the recent past, holding up near the highs, the recent highs. The key is that actually we stay above 37,000 in the floor of that rising trend channel from October. Very steep one, unbelievably steep. In fact, if we break through 38,000, then we could get up to the top of that rising October trend channel, 39,300 by the end of next month, although at the moment that does look a little bit optimistic. The worst case scenario on the downside probably back down to December resistance, initial December resistance of 36,400. On to one of the markets at the moment, which is Bitcoin, and a bit of a false dawn there in terms of the clearance of the ETF earlier in the week, but rising trend channel there from October, top of that channel heading for 52,000. We're hoping for that by the end of next month, hopefully 50,000 by the end of this month, and upside valid while we hold above the 50-day moving average, currently around 42,000. But we could, I suppose, hit that top of that channel at 52,000 as soon as the end of this month if the fundamental news kicks in. Moving along to gold, and here you can see that it's all about trying to find support at and above the 50-day moving average at 2021. Above that, we've got recent resistance at 2070 and 2100. The big break of 2100, if we get it, would then take us up to as high as 2180, which is that late May 2022 resistance line projection. But key here is staying above that 50-day line. Otherwise, we might have to test the 200-day line at 1980 one more time. Moving on to the stocks, and great performance by Cellular Goods with the shake-up there. We had this already as a bear trap gap reversal, so a bear trap below the October support there, 0.32. Above that, we were looking for up to 0.6, and so far, I think the high has been 0.55 with director buying. In fact, that was announced this morning. The way things look, it looks as though there's been more director buying, but 0.6, the big level there. If we break that, then it's up to 0.75 by the end of next month. Ideally, now we stay on the right side of December resistance at 0.45, ahead of 0.6 and 0.75 on Cellular. Next situation is CapEx, and here the possibility of a broadening triangle base. The shares have rallied off the floor of that base, but the problem, as you can see from the recent past, that whenever there's a rally here, there is quite a lot of selling even on the same day, and there was obviously the gap down there last month. But bullish divergence, and if we can hold above recent resistance around 0.73, then there's a chance of at least hitting the 50-day moving average around the 1.08 pence level by the end of next month. Obviously, at the moment, 2 pence, and the top of that triangle seems a little bit ambitious. Moving on to Cornerstone, which had a bumper update today, and here justifying the faith of Twitterati who are backing this of late, basically since the summer. Rising trend channel there from August, top of the channel there heading for 40 pence, which we're hoping for by the end of next month, while we remain above a recent resistance and new support at 25. So above 25, looking for 40 there on Cornerstone over the near term. That gives a bit of a wiggle room for both the bulls and the bears. Moving on to Cizzle, where you can see we've had a rebound off the 50-day moving average, a rising 50-day line there at 2.1 pence. Above that, we're looking for 3 pence by the end of next month, by way, hopefully, of an end-of-day close above the 50-day moving average, rather the 200-day moving average there at 2.3 pence. So we need to close where we are or higher for that kind of trigger towards 3 pence. On to Destiny, which has been covered here quite a few times, and normally in a good way. Here we've got the possibility of an end-of-day close back above the rising 50-day moving average at 70 pence, about 17.5 pence. If we can get that, then it could be progress towards the £1 area by the end of next month within a rising trend channel from last April. At least we could get up to the 80 pence area, hopefully by the end of this month. On to a stock which doesn't get so much coverage here, Distil, or anywhere else. In fact, we've got an unfilled gap to the upside. Good support there in the recent past at 0.6 pence, and above 0.6, we're looking for 0.9 pence at the top of that triangle from the beginning of last year by the end of next month. Obviously, if you're cautious, wait for an end-of-day close through December, resistance 0.72. But with the run-up to a golden cross, rising 50 and 200-day lines, it looks as though there will be a new leg up for the shares after this mid-move consolidation has done its bit. On to Emmerson, where we're waiting for, I suppose, a big green light somewhere from the area of Morocco. Here we've had a bounce off the broken resistance line there from July around 1.25 pence. Above that, we've been looking for at least 2 pence initially, which was obviously December resistance, and then up to as high as 2.75 pence by the end of next month, while we remain above that 50-day line at 1.5 pence. Next up is Empire Metals, one of the stocks of last year, and here seeing the shares consolidate well above the old resistance there at 12 pence. The longer we stay above that, the greater the chance of a move to 18 pence by the end of next month, and reasonable risk-reward trade even after all the gains if we have 12 pence as a stop-loss zone. Moving on to Geiger counter, and here you can see that we've got a rising trend channel there from May. Obviously, you know, uranium is one of the hottest commodities around at the moment. The recent support there around 54 pence, which is the 50-day line rising, and above that looking for 70 pence by the end of next month or even sooner. Next up is Great Western, which has had many false dawns, but maybe this is going to be the correct dawn. Breaking through the 50-day moving average after a minor bear trap below the October support. Above that 50-day line around 0.04, looking for up to 0.07 at the top of that triangle from back in July. And that's also the area of the 200-day moving average. One of the top 24 for 2024 was Incanthera, and seems to be proving that to start January. You've got a broadening triangle there looking for 16 pence as soon as the end of this month within that broadening triangle, and obviously assuming that the shares will remain above the recent resistance, or the resistance on the way up at 8. So above 8, looking for 16 on Incanthera, and enjoying the golden cross buy signal there between the rising 50 and 200-day moving averages. On to a Nightcap, which looks like it might finally be turning around. Good fundamental update today from the company, maybe upsetting some of the bears on that news, but bullish divergence and a bear trap from below the old November support there at 5.5 pence. Above that, or the longer we stay above that, the greater the chance of a move to at least 7 pence, which even though it's rather low in the range, it would still be a good start. We haven't been above the 50-day line since back in July, so even today's price action something of a breakthrough. On to PennPetro, which seems to have gone a bit quiet recently, but the shares looking good within a rising trend channel there from back in June, waiting for an end-of-day close above the 200-day line at 2.25 pence, or 2.27, and above that looking for 3 pence as soon as the end of next month. So let's see if PPP can deliver the goods as well. Reabold Resources, interesting day today, probably today's D-Day for shareholders, and here you can see that the shares have had a key reversal off the lows and off the floor of that broadening triangle there from July. The longer we can stay on the right side of 0.08, the old support for the shares, the greater the chance of filling that gap up to 0.1 pence and maybe getting up to 0.11 over the course of the rest of this month. The result of today notwithstanding. Finishing off with Sosander, which is also doing perhaps rather better than people were expecting. Here you can see that the shares are in a rising trend channel base. We've had a bear trap island reversal, so gapping down and then gapping up. Very good to see a sideways shuffle above a rising 50-day line. That's around 14 pence. The longer we can stay above the 50-day line, the greater the chance of a move towards 20 or even 21 pence by the end of this month. That's it from me today. More updates tomorrow.